going to the market. And certainly some of these events could produce adverse effects, or it could certainly work against us, especially if we're already in a position ahead of these releases. So this is another example that we have from our website, and you can find it under the scalping section. But here we see volatility, and volatility typically is low ahead of these major news releases. So if you're a scalp trader and you're just trying to do it, and if you're really comfortable with just picking up little pips, you might want to trade these techniques that we're seeing right here. You certainly try to buy in, just look for maybe 10 pip gain, 5 pip gain, and just sell out real quick. But one thing that we see is once that non-farm payrolls release crosses the wire, and typically the non-farm payrolls is one of the biggest market moves that we've seen throughout history, but one thing that we see is volatility really picks up during that release. And certainly, I would say if we saw this sort of top of that really narrow range that we saw, and we were trying to short it, it would have certainly worked against us, and we could have ended up with a big loss unless we placed the stop. So again, when we're really looking for these small term or particularly small gains, we really want to weigh what we're getting into, and we really want to know, because again, certain market conditions, and we certainly see that when the U.S. market opens, is volatility or volatility remains over here, but until we get that economic release, that's when we see really a big spike in volatility. So, and one thing that we see is spread returns to normal, and the market works out in a consistent direction following this release. So this is the strategy that we're using here. It would no longer be valid when we see price action moving higher. And then when we're trading on that intraday basis, we would certainly have to be able to adapt our strategy really quickly, unless we would have missed out on that as well. So trading on an intraday basis is really difficult, and certainly the things that we do promote in Daily Effects, which is basically trading news, because it really sets up the conditions that are favorable to trading on an intraday basis. That's one of the things we do there. But for some of these strategies that we just went over today, some of them can be really risky and could actually produce a lot of loss. So additional guidelines is, as I mentioned, is adapting the strategies to market conditions. Just because we see your dollar holding 100 pip to 150 pip range on the day, it doesn't necessarily mean that we're going to be able to actually catch all those movements within a certain day.